Well, let's start up with this big economic story. And South Africa's growth forecast has been reduced further than any other major economy in the International Monetary Fund's new report. It projects the country's economy will grow just 0.1%, down 1.1 percentage points from the January report. Kate Fisher, our correspondent, joins us from Washington, and that's where the IMF spring meetings are taking place. Kate, what has the IMF said about prospects for global growth?
Well, it has lowered its GDP growth forecast down to 2.8% growth. And it says that any growth over the next 5 years globally is going to be limited. It says that's because of inflation, high uncertainty and banking sector stress, tighter monetary policy, and of course, geopolitical tensions with Russia's invasion of Ukraine and the escalating rivalry between the US and China. And those unexpected failures of banks here in the US last month, that was Silicon Valley Bank and Signature Bank, and the collapse of Credit Suisse, that hasn't helped because it's upset the markets and it's brought concerns about financial stability. And that complicates countries' central banks' attempts to try to tame inflation while also maintaining growth and the health of the banking system.
And we've been discussing this in our program earlier, the fact that South Africa's been hardest hit amongst the world's major economies.
That's right. The IMF has cut the GDP growth outlook to just 0.1% for this year. And that means that South Africa's flirting with a full year recession. It's the biggest reduction in a forecast among all the major global economies that have been detailed in this IMF report. Its GDP outlook has been shaved by 1.1 percentage points from the January report. The only other major economy to come close to that is Japan. The IMF forecasts Japan will see a 0.5 percentage point reduction in its GDP rate down to 1.1% this year.
So we, again, also discussed some of the reasons behind the projections for South Africa being cut. And there's a whole basket of issues associated with this. Just elaborate on some of the issues that the IMF has red flagged.
Yeah, well, the biggest one really is the persistent energy crisis. Of course, already, according to the Reserve Bank, load shedding remains the key risk to the economy, threatening to lift costs across the board. The IMF says it is down to this significant increase in the intensity of power cuts, as well as weaker commodity prices and the external environment. And the IMF predicts that South Africa's growth outlook is expected to recover over the medium term, but that South Africans at large are still likely to become more poor over time. And it says that's because of long-standing structural impediments like rigidity in the labour and product market, which it says offsets any expected improvements in energy supply and higher private spending on energy-related infrastructure. Other risks that it talks about to the country's growth include, from an external point of view, a deeper and more protracted global slowdown that will affect South Africa, also further weakening of commodity prices and a shift in global investors' sentiment away from emerging markets. And internally, on a domestic front, delays in addressing that energy crisis, Eskom's and Transnet's operational financial weaknesses, and slower than expected progress in reforms and policies there. And in order to kind of mitigate those risks, the IMF says that South Africa needs to implement structural reforms and hope to boost private investment, and that would in turn lead to more employment and growth over the medium term.
We certainly have our work cut out for us on a number of fronts. Kate Fisher, thank you for the update. SABC News correspondent joining us live from Washington.